Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving an outlook of the market for the week of the 31st of January until the 4th of February. Now, as always, before we get started, please note that all of the ideas discussed in this webinar are my own opinions and they do not make up for any form of investment and trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, or whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Now, just like with the past couple of lookbacks and outlooks as well, we'll be kicking off with stocks. As we mentioned in the previous lookback video, the week ahead will again be one to watch out for as far as stocks and the current Q4 earnings season. Last week, if you remember, we had Microsoft, Tesla, and Apple reporting their numbers, and some of the big names for this week will be Google, Meta Platforms, which is formerly known as Facebook, and the e-commerce giant Amazon. The impact of the earnings call can clearly be seen from the last couple of reports we've covered. If we take, by example, Tesla, we saw that after the release of the report on the next day, the prices fell by as much as 12%. Again, on the day following the release of the figures, while Apple rose as much as 5.5%. If I pull up the charts very quickly for reference, we'll just look at Tesla first. So Tesla, and you can see the weekly time frame. I can even switch on the daily just to narrow it down a little bit more. And you can see on the day following the report, so this is where the numbers were released, we had a huge gap down with prices falling as much as 12%. But obviously, zooming out, we can see the general upwards movement for the past couple of months since basically September of 2020 that Tesla has enjoyed. And I'll switch to Apple as well real quick. And we can see how the prices rose after the release of the event, and we had a pretty strong gap up as the prices closed here. We gapped up and pretty much closed at the very highs without even making any pullbacks. So again, we can clearly see the impact that the earnings call can have on the following days after the release of the events. If we're focusing on Google for next week, well, we do have a general sell-off with regards to technology stocks for the past couple of weeks. Google shares are up by as much as 40% in the past 12 months. With the comments that are to be made during the conference, the likely driving factor as to how the stock prices are going to react. Moreover, Microsoft's acquisition of Activision, which again we did mention in the last couple of videos, they acquired Activision for $68.7 billion, which is definitely something that was seen as a big wake-up call in the tech sector. Therefore, it's going to be interesting to see how the rest of the giants are going to react to those news. So moving forward to Meta, which again is formerly known as Facebook. Now, I'll just pull up the chart again so I can indicate as well the general sell-off that I've been talking about with regards to the tech stocks. So you can see after peaking at about $382, we pretty much are down to the 300 point mark. With that being said, Meta is expected to report earnings of $3.78 per share, which is roughly minus 2.6% year over year as per the Zacks consensus estimates. It's obviously not certain that this will be the figure released, and therefore all eyes will be on the actual figure and the stock price movements thereafter. The revenues on the flip side are expected to be about 33 billion, which means they're up 17.7% from last year's quarter. And again, despite the sell-off that we have seen with regards to the tech sector, again, it's very important just to zoom out a little bit just to see the overall picture, and we can see the kind of uptrend momentum that Meta has been enjoying. So this could likely be seen as a minor pullback in the overall trend. So yeah, this is with regards to stocks. Moving on to Forex, in some of the key events for next week are of course going to be the employment data on Tuesday coming out of Germany, one of Europe's largest economy of course, as well as the GDP data being reported from Canada on the same day. Again and again, what I keep repeating on the videos is the fact that you can access all of these key events. You can have a look at them from tixee's website. If you just hover over education and research, and you then go to economic calendar, you'll basically be able to see all of the events being listed. And not only that, you can also filter them by the importance. So in this case, what I like to do is to set them to high. I can use next week because we'll be focusing on next week. And like we said, on Monday, we'll have the GDP data for Canada and the employment data coming out of Germany. On Wednesday, we'll have the Eurozone's inflation figures, but in my opinion, the events to look out for with regards to Forex are coming out on Thursday and Friday, respectively. The reason I say that is because on Thursday, we're basically going to be having the UK's interest rate decision, with the Bank of England expected to raise its rates to 0.5%. We can see right here as well that we have the event taking place. You can see at the time, obviously, in your own time zone. Aside from the UK's interest rate decision, Eurozone will also hold the same key event on the exact same day, with the ECB's press conference following suit. Now remember, the press conferences are just as important as the actual interest rate decisions themselves. Reason being because the bank's presidents can give out their outlook for their relevant economies, and the comments that they make thereafter can also have an impact with regards to the Forex market. Lastly, yet another big day that is going to follow suit is on Friday, because you can basically look where my mouse is. We'll be having the non-farm payrolls, or the NFP reports, coming out of the US. This figure, for those who don't know, is typically released on the first Friday of each month and considered to be one of the most highly volatile events that can shake up the markets at the time of the release. For example, it's not unheard of to have the pound dollar moving on average between 50 to 70 pips when this event releases. And not only that, we're also going to have the unemployment rate, and you can see these are pretty much coming at the exact same time. So if you're trading the Canadian dollar or anything that relates to the US dollar, it's definitely an event to be on the lookout for. Now moving forward, looking at oil, as per the usual event that will be in focus, is going to be the oil inventories coming in on Wednesday. Now oil prices, if I'll just pull up the chart, I'll just zoom in a little bit so you can see that basically if we count on the weekly time frame, 1, 2, 3, 4, 5, 6, oil has enjoyed a 6 consecutive week rally, with prices boosted by the tightening supplies and the ongoing geopolitical tensions between Ukraine and Russia, with multiple news outlets mentioning the potential of war. Of course, everybody hopes that doesn't happen, but with regards to the impacts in the markets, we can clearly see what an impact can have with regards to oil. Therefore, traders focusing on the technicals will definitely be asking themselves, in my opinion, when is this rally going to come to an end? And if so, how violent is the retracement going to be? Again, looking at the chart prices, when we came pretty close to the 90 level mark, we did retrace a little bit. And if we were to add some indicators as well, so I'll just add the moving average real quick and the RSI. Again, you can readjust this according to your liking, but in my case, I'll set the EMA to a 21 period and exponential. And we can clearly see how much higher we're trading above the EMA, and also the RSI. Depending on the levels that you set, it's pretty much nearing an overbought condition. So yeah, this is with regards to oil. Now moving to another commodity, gold fell by as much as 4% on the week last week, and with the comments made by the Fed chairman Jerome Powell, it will be interesting to see how prices will continue through next week. I'll just pull up the chart for reference as well. Now, as we mentioned earlier with oil, the geopolitical tensions between Ukraine and Russia seem to have given it a boost in recent weeks. We can see we've had a couple of weeks here in the green, also here 4 consecutive weeks in the green. So it does seem like it's a supporting factor for gold to hold its ground, despite the interest rate outlook with regards to the US dollar. This obviously points directly to the inverse correlation between the gold and dollar that we've mentioned previously as well. On the technical side, we've crossed below the $1,800 mark, now trading around 1791. We've broken slightly below the 21 period EMA, but we can see for the past couple of weeks, if I zoom out, we've been trading in this sort of range right here. That you can see the peak right here and the bottom right here. You've pretty much been trading along this range. So yeah, we've just broken just below the 21 period EMA with the RSI trading at 48, so pretty much close to the midpoint mark. Now, lastly, we're gonna look into crypto. Bitcoin rebounded slightly on the week, rising by about 4%. However, its prices are definitely still well in the red since the beginning of the year, as they're down by as much as 20% overall. And again, just pulling up the chart. So again, on the year, they're down by as much as 20% overall. But if we zoom out and see the most recent peak, prices are down by more than double, pretty much at minus 45%. As per a report from Cointelegraph, the funding rates are continuing into the negative territory, which seems to be potentially pushing the market further lower towards the $30,000 mark. So I'd pretty much have to zoom all the way out for you to even be able to see this level, but it's sitting right below the current levels that we're currently trading on. Now it's around at 37,000, so $7,000 lower. Prices are trading well below the 21 period EMA, and with the RSI also sitting at around the 40 mark. If I switch here just to have a look at the EMA, we can see it right here where it's sitting at, and also the RSI is about at 39 as we mentioned. There you have it. This is as far as the outlook for next week's markets. Again, don't forget the major corporations reporting their figures, namely Google, Meta, and Amazon, as we mentioned, in case they're on your watch list. With that being said, I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.